Welcome back to the Bitcoin Treasuries podcast. I'm Tim Kotzman. I'm here with Jesse Myers, the head of Bitcoin strategy at the Smarter Web Company, Andrew Webley, the CEO at the Smarter Web Company, and Sandra Andersen, the co-founder and executive chairman at H100 Group.
So Sandra, right before this, we were talking now no longer CEO. So what is the announcement there? I wanted to know.
Yeah, basically, I brought in a lot of our biggest shareholders, and so it was very natural for me now when the company has gone from 0 to 1,000 Bitcoin to be steering the whole strategy of the whole company, trusted by the biggest shareholders. So, and by Swedish law, you can't hold both positions. So therefore, like when you step up, you will still be in the same position in an executive daily role. So nothing has changed there. But it was, by shareholder demand.
Pretty cool. What was the impetus? I like to use fancy words. I think that's the right one in this context. What's the whole reason that we're here today? What happened on X that can somebody tell us that story?
Yeah, sure. So I think it was a month or so ago. I remember I was on holiday at the time, and the community on X said something about, Smarter Web or H100, and they said, we should chat, and maybe film it for everyone. So I can't remember whether it is you reached out to me or I reached out to you, but within minutes we thought, well, we're both in New York, so let's do this.
It's very interesting when you talk about a lot of these CEOs in this industry. We all know each other quite well, and we called each other and asked the question direct, which is quite unique for this industry, which I very much like. And the event yesterday was another brilliant example of how this industry is working different from many others.
And it's great as well because, sometimes times are good, sometimes things are tough. We're all busy, we're all doing different things. And to have the support from each other is, it's pretty cool, actually.
Yeah,
I agree.
It was a cool example of how Bitcoin Twitter, Bitcoin X, whatever you want to call it, is really like instrumental to how this landscape is evolving. And the companies are listening to investors on Twitter and paying attention to what do you guys think we should do, and who should we talk to, and what kind of conversations should we have? And it's a privilege to be part of an industry where there's mutual respect, and we're really we're all rowing in the same boat, trying to achieve the same goals. And then we're all in New York at the same time because of the absolutely excellent Bitcoin Unconference yesterday here in New York City. Planned in how long? Like 6 weeks?
Roughly 6 weeks, yeah.
And I was talking to Adrian who produced the show, and I realized I can't recall a single hiccup that I noticed. So that's pretty incredible and fantastic production value. And all the best Bitcoin Treasury minds all in one stage in the round. And it was really a wonderful event. So thank you for putting it together.
Thank you. Yeah, we were really, really, really happy with how it turned out, and lots of great feedback. So yeah, this is just the beginning. So yeah, we're really excited.
Yeah, well, what should we dive into next then?
This is my co-host, Jesse Myers, and we're going to be interviewing roundtable, I guess.
Yeah.
Roundtable.
Well, I can make a suggestion. Leading on from the conference, why don't we go about talking about the best bits of the conference, or key takeaways? 1, 2 things that we thought were particularly interesting in terms of subject matter, because obviously everyone can see the show on the internet, but maybe one thing that you particularly liked from it.
I think that the industry is now evolving very, very quickly, and what surprised me that we're already now at the stage where we're discussing how this is forming a new industry, and each individual Bitcoin Treasury company will design products around that specific market they're in and add additional shareholder value. More than only issuing new shares to buy more Bitcoin and convertible bonds to buy new Bitcoin. And that's quite clear for me now, that we start to think about this is the new Rockefeller, or in Norway we have lots of great shipping and guys and energy guys and fisheries that have done these commodity businesses. And for me, it's very clear that this is going to be a commodity business, that you have management companies on top, and what they do, they accumulate as much of their preferred commodity, which we all try to collect, which is Bitcoin. And on top of that, you can issue multiple products. And I don't think we have seen 1% of the business models that would be created on top. And I think when that's basically Saylor's pitch, I think we all will work quite hard to figure out what we can do. And that was my main takeaway from the content. And again, it was a reminder of what the truly unique community this is, and how much like a digital platform like X can connect people all around the world, and you basically enter a conversation in 2 seconds, like you know each other very well and you never met them, but you have spoken to them multiple times online. And I think that's such a unique industry, and it's such a new characteristic that we haven't seen before, and maybe the first global market ever, where you have like shareholders from all around the world trying to access your German ticker or your US OTC ticker. It's such an interesting vibe and unique community.
Yeah, I just to pick up on your X point, one of the things that I love about doing this job is that, it's not only can we all reach out to each other, we can share each other's content, we can, then go offline and talk, but it allows us to interact with the shareholders, obviously not all the time, because, take the last few days, we've all been incredibly busy working very, very long days, but, the shareholders can actually post things direct to us. And I think you're right. I don't think you've ever really seen that with public companies before that are truly, engaging with their shareholders. And we often say that the great thing about Bitcoin Treasury companies is that, it's one of the few things in capital markets where it comes bottom up as opposed to top down. So the retail investors are first. They're leading the way with, the research, the analysis. In many cases, they're getting the best deals, the earliest deals. And normally with traditional finance, it's the other way around. They often don't get, to see things until the end. Whereas, we've been meeting, different investors today. And that's great. And, we've had some great conversations, but, the retail investors are understanding this before the institutions. And I think that's quite cool. For me, the biggest takeaway of the event. So I've told my story many, many times about how, 5.5 years ago, whenever it was that, I saw Saylor put Bitcoin and a public company together. And it was really interesting for me because the last 5 months, since being listed have been, fairly full on. And to see Michael Saylor talking and to say that this is the first year of this new industry made me think for a minute, well, we've had some great times with the share price. We've, obviously, suffered the MNAV contraction that, many companies have seen recently. And then to take a step back for a moment and to think, hang on a minute, this is just year one, even though the models existed for 5+ years, really as all of us doing these things in similar ways and different ways, we are only at the start. So the old overused phrase of, we're early, etc. As I like to say, we're only just getting started. It's true. Yeah. And I think that was quite cool.
Yeah, it was really cool. I loved how Saylor articulated that in a way that people haven't really, that we are in year one of a new industry. And a few months ago, I went through the exercise really of trying to figure out like how big is this? At the time, we weren't really thinking of it as an industry, and like how big is this opportunity for Bitcoin Treasury companies? How big will this be for Bitcoin? And I kind of did some back of the envelope math, and in the way that I was trained in management consulting, and thinking through the sort of logic of like how Bitcoin Treasury companies are the entities that are equipped to go create the products that appeal to various buckets of capital in the world, fixed income market, equity markets, the money market, maybe real estate one day. We'll see what sort of products get created. And thinking through that, I realized that these are going to be the bidders when Bitcoin's at $5 million a coin, because Strategy and hopefully our companies will have unlocked the next $1 trillion of fixed income by offering them 10%, and taking that capital and buying Bitcoin with it, knowing that it's going to appreciate at 30 to 50% a year. And that if this process plays out for 10, 20 years, these entities will accumulate a huge portion of all the Bitcoin, and maybe as much as half of all the Bitcoin. And using Saylor's numbers of $13 million per coin in 20 years, that would mean that these entities would accumulate $140 trillion worth of Bitcoin, which that makes it the biggest industry in the world by value. And then now we're talking about an industry, right? And so that kind of hit me like a ton of bricks when I did that exercise a few months ago. And it's an industry. It's just so early. It's hard to see it. And I think yesterday it was a lot easier to see that this is a budding industry. You had 190,000 people tuned in at the peak of the live stream, and Mike Germano from PubKey had a great point that that's more viewership than any show on MSNBC has, and that's quite an achievement for the first go of a media format, and I think speaks to like the bubbling in interest and enthusiasm and value that people are realizing is here in this new industry.
Yeah, no, I think we are actually like rebooting the public market. The last 2 decades, it's all been private market funds, private equity, venture capital, and I think we are like close between 7 and 8 years from the founding of a company before they go public. So the value creation of most companies happens in the private market that are not accessible to normal people. A Bitcoin Treasury company, they go public day one, which basically makes you, like everyone have the opportunity to be part of the value creations from day one. Like in venture capital, it's only very, very wealthy LPs or angel investors with a lot of network that can do that. And I think that's truly unique, and that makes it very like, that it has this virality built in that will reboot. And I think most of the alpha in finance over the next 2 decades will come from public markets, and due to Bitcoin Treasury companies. And I think when you can buy things through your Bloomberg terminal, you attract a lot of capital, and a lot of these fintech platforms makes it very easily available for everyone. And X makes it very easy to give feedback. So we listen to the community, we see direct effect on the share price if we do something wrong, and we have to fix it, and we have to go out there and speak. It's not enough anymore to get like one shareholder update a month. So I completely agree with you, and I think it's such a fascinating industry now that reboots public market. And again, I think the products we are going to go forward it's going to be so much variability in what type of products you succeed as a Bitcoin Treasury company going forward.
Yeah, that was the other insight that I thought was really cool from Saylor speaking yesterday. He talked about how there will be Bitcoin Treasury companies that focus on different little niches, and we've talked about there's going to be a sort of winner take most in every capital market. I think that's true. Maybe it's that there's a head and shoulders leader, however you want to say that, basically the same thing. But there's going to be opportunities for all sorts of different business models, at the periphery, or sort of the more niche capital pools that the leading Bitcoin Treasury company in that capital market doesn't quite focus on. And there's going to be quite a bit of opportunities for specialization of products and particular market focuses like insurance or particular types of credit, or maybe you focus on the money market, and we're going to start to see all sorts of variation in that way. But I think for us, the big opportunity is be the leading Bitcoin Treasury company in your capital market, and then you get your pick of the litter, to start.
Yeah, I took Sailor's advice yesterday and tried to speak as much as I can with the AI, and I asked the AI how big is the private credit market, and that's like $3-4 trillion, and they have like 2% management fee, 20% carry in that industry, and the average yielding product there is around 7-8%. That's and you take a lot of management risk when you do private credit. You basically leverage up companies in buying them and restructuring them and try to buy them and sell them again. But here you have an opportunity, like Sailor has showed us, to issue those kind of products with a completely different structure, way simpler, and you're tapping into a private market of 3-4 trillion. And I see so many opportunities, and I agree with you. Down payment of Bitcoin into real estate, credit card issued on your Bitcoin stack. So if you want to buy a car, you don't want to sell your Bitcoin, but you have cash flow to pay. Should be quite easy to issue like liquidity to over like these Bitcoin credit cards. And we have seen like reward system with Bitcoin. It's so many things that Bitcoin is going to be like packed into financial tools, and
yeah,
we haven't seen like 1% of it.
It's funny to me how what we're talking about is like rebuilding capital markets on a different capital base, and what that's going to amount to is over the next few decades, like the airplane is in flight. The global economy is in flight, built with fiat parts, and we will be replacing one by one each of the parts while the airplane keeps flying with these Bitcoin products, and reshaping capital as we know it into a plane built entirely of Bitcoin era parts, and it's going to be, it's a once in a species moment of us going from analog capital to digital capital and a digital capital structure for everything. Mm-hmm. It's going to be, what an incredible opportunity to live through that moment. And, if you're watching this now, you're paying attention at the start of this process, and we get to see it play out. It's pinch yourself stuff,
I think you're right, because, in the UK, equity markets have been fairly poor for 10, 15 years, something like that. Ever since the credit crunch, really. There's been brief moments where they've popped, but, on the whole, it hasn't been a great place to be an equity investor. And then when we IPO'd in April this year, everyone's credited us with, bringing the equity markets back to life in the UK. It's become exciting. All the different advisors, whether it's the brokers, the auditors, the lawyers, they're all getting busier and busier with, these different opportunities. And one of the things that comes up quite a lot is, the argument of Bitcoin as a medium of an exchange or a store of value. And, clearly I'm very much on the store of value side. However, if you think about it over the long term, when we're rebuilding the public markets on Bitcoin, that's definitely a contribution to the Bitcoin ecosystem. If we replace the fiat currencies, and it's not just the base unit that they're measured in, but also the way they're transacted. If you think about some of the companies out there that are exploring the tokenization of securities, this is it's mind-blowing, really, when you think about what the change could be, far, far, far more significant when you think about the flows of capital globally going through all the different public markets. Even think about things like the international settlement system. The reason why we as a business accepted Bitcoin as a payment mechanism in 2023 was very much focused on international clients, because it was slow and expensive to get relatively small amounts of money paid from, the US to the UK or the Middle East to the UK. And that was one of the main reasons why we started accepting it as a payment mechanism. Mm-hmm. So yeah, it's very exciting and slightly mind-blowing.
It definitely has like the main use case today is store of value. But if you try to transfer money from US to Sweden, I can tell you that Bitcoin is way more efficient payment method than going through banks. So I definitely see that medium of exchange thing is happening on the bigger, like when you want to settle $1 billion, Bitcoin might be the most efficient way to do that. And it will potentially like going down until the daily purchases, like we do in Lugano. I try to pay at least like 5 times a week with the Bitcoin and the Lightning system, because it works very well. It's just like not broadly adopted yet.
We had a dinner the other evening, and at the end I said to everyone sitting around the table, I said, where do you all sit on the store of value versus the medium of exchange? And one of the people there said to me something quite good, which was he is very much on the store of value side, but that doesn't work without the ability to exchange the value without a counterparty. So it's a bit of a hybrid, and we often say that some of the things that we'll do as a business longer term, we don't even know yet. We've got our strategy for the next few years, but in 10 years time, it's impossible to say some of the things that the business may evolve into. And I think that's quite important for people to sort of understand that a lot of the things that Bitcoin will be used for in the future may not be evident at the moment, in the same way that if we look back at the internet, in the late 90s, some of the things that we do today with the internet, we wouldn't have thought we would have done 25 years ago. So that's quite an interesting perspective as well.
Yeah, I completely agree. I think, at least in our organization, we think about it as it's an asset play. You have to take care of your asset. You have to aggregate as much of the asset, which is Bitcoin, as possible. And you use capital architecture to accomplish that in different formats. So I completely agree with you that we're very, very early, and it's hard to say like where are we going. It's a matter of like how do you build your organization to have the skills that can tackle this super volatile and you have to be super agile to succeed here.
Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts. Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15 15. Join us at the Wynn in Las Vegas, February 23rd through the 26th, 2026 for Bitcoin for Corporations. Use code KOTZ when you grab your tickets at strategy.com, and we'll see you there. Two different directions. We can go both directions or one or the other, but it's just some topics to throw out there. And maybe a note first. You said, maybe a once a month update to shareholders. It's interesting in the traditional TradFi world, you have the current U.S. administration saying, hey, instead of quarterly reports, maybe we'll just make it every 6 months. But I feel like with Bitcoin Treasury companies, it's like 24/7, 365 that, to your points, you're receiving information and, it might be a pretty, not constant, but at any time it could be like plan, do, check, adjust, not once a quarter, but like once a day, once a week, and just all of those learnings compound upon themselves. And right, you have this digital capital and digital distribution, whether it's investor relations or any type of communication. It's just interesting to try to just see how this can snowball. How do the meetings here in New York compare to the markets that you're working in? And Andrew, you said, no one knows what's going to be happening 10 years from now. Is there anything that's surprised you recently that you think would be valuable to share with the community?
Yeah, I think all of the different markets, where we go, so we've recently got back from Asia. We met a number of different investors, mostly sort of family offices over there. In New York, it's mostly, your more traditional institutional investors, and then obviously all sorts of different ones in the UK. I think they're all at different stages in terms of understanding the Bitcoin Treasury model. Clearly in the US, they're more advanced at an institutional level. So there are similarities, albeit different points on the life cycle. I think, one thing that, everyone needs to be aware of is that different capital markets have got different amounts of capital available to them. So, a small investment from a US firm may be a pretty big investment from a UK firm. So there's similarities, but they're different. The main thing that I like about some of our international investors on the institutional side is how much more forward thinking they are in terms of they get the model. So, we use the phrase compound Bitcoin all the time. And, there's a lot less explanation of what that means and how it works. Still some of it, whereas, in the UK, there's more of that. That said, 5 months ago when we IPO'd the business, a lot of the institutional investors were interested, but extremely cautious. And now, in part, I suppose, because they've seen the model work, we've proven the model to a degree, albeit at a very early stage. So now the institutional investors are getting a lot more interested. I think there's still other things that we need to do as an industry to explain it more. And, when I think, where's this going to be even in a year's time, it's, again, that's something that's quite mind blowing, because, in less than half a year, things have changed a lot in terms of the institutional appetite towards the model.
Just a quick note on something incredible you just said, which is we proved it out over the past 5 months. Strategy's been proving it out over the past 5 years.
Yeah. Specifically in the UK. Yeah. Specifically in the UK, because when we listed the business, funnily enough, I said to everyone at the time, I said, look, this is what we're going to do. You can see, this has been going for 5 years with strategy. Mm-hmm. And then, one of our directors, Tyler, he's also on the board of MetaPlanet. So we were using MetaPlanet as an example to say, look, this is how it worked in Japan. We haven't got this in the UK. This is what we're going to do. This is how we're going to do it. And even then with the case studies, for me, it was obvious because I've been investing in strategy since the start, but they didn't get it. The local side of things has to be communicated. I don't know why that is. Like, we're obviously, all friends, and we all live in different parts of the world. So maybe we think about it more in a global nature. And, a lot of the, even Bitcoin, I can't remember who it was the other day, but they said to me that they went to this is one of the other CEOs. They went to an institutional investor meeting, and they had to explain Bitcoin. So and that's okay. Maybe it's tiring if you've explained Bitcoin to people, hundreds and hundreds of times, but that is part of the job. And it's it's understanding that different people are at different stages of understanding it. If we want everyone in the world to adopt Bitcoin, then we all have to put the effort into sort of getting them to understand it.
And I would add that the institutions we're talking to are a tiny subset of global institutions, and that's really because our brokers, people we get connected to, they're finding the people who already are open to this, what is broadly seen as a crazy fad or some fringe idea that has no basis in reality, but there are a small percentage of institutions have done enough homework or have an open enough disposition to see Bitcoin and understand there must be some value here and maybe I should pay attention. All that to say that we're still very early in the S curve of technology adoption. Institutions are, in many ways, they are committees, and that means you need to get a tipping point of individuals in an institution to believe in Bitcoin, and that means you're waiting for a critical mass of individuals to have done enough homework on Bitcoin, and go ask anybody on the street what they think about Bitcoin. 9 times out of 10, they're you're going to sound like a crazy person. So, and that's true in institutions too. And you got to get to some sort of critical mass in any institution. All that to say that, I think retail investors, especially savvy, Bitcoin investors, are surprised to imagine that the institutions are behind them in understanding this. But that's the reality. And that's because an institution has a higher bar. You need more individuals to get it than one individual getting it because they do their homework for themselves. And that just is part of how early we are. I think it's so easy for Bitcoin investors and especially Bitcoin Treasury company investors to think, it's obvious. It should be obvious. Everybody can see the value delivery that's being created here, but that's not the case, and that's like exactly where you want to be. You want to be shocked that more people don't get it, because it just means that the vast majority of people are still going to be woken up by what I think is the economic reality of how much value is delivered through adding Bitcoin per share in this particular business model. And we can talk about that versus traditional equities, but the cadence of it, the pace of it, the sheer amount of value that a well-run Bitcoin treasury company can deliver is so much better than what you are going to get in traditional equities markets, where you're paying 20, 30, 40 PE ratios. And it's 2 or under for the equivalent P-bid ratio. Mm-hmm. For a Bitcoin treasury company. Ours are, I think, under a year, under half a year even right now. And I think that's the reality, is that institutions don't know that yet. Most individuals don't know that yet. Most Bitcoiners don't know that yet. And it's just really the Bitcoiners who know enough about capital markets or finance and Bitcoin to have done their homework on both, to understand a Bitcoin treasury company and see the value delivery there. And that's a great place to be, because it's a tiny, tiny slice of the world so far.
How much time do you spend discussing with them about DATs?
Well, so over the last couple of days, I suppose, the word DAT has been used quite a bit.
That's the same experience. I actually learned the term here in the US. Yeah, so you're a DAT. I was like, well, yeah. What is a DAT?
Well, it's quite funny actually, because
what did you call me?
Yeah. When we listed the business, actually, we had to use the phrase digital asset treasury.
Okay.
And it was only after about, I think, a month that the lawyers said you can call it a Bitcoin Treasury. So yeah, we do hear about it quite a bit. It comes up quite a bit on the panels when we're talking as well. We often hear the phrase shitcoin as well. That comes up quite a bit when you bring it up at a Bitcoin event. Rightly so, in my opinion, not wanting to offend anyone, of course. I personally believe that if you're building a company with a large treasury, you need a suitable treasury asset. And, I don't believe that any other asset is suitable as a treasury than Bitcoin. So it's sort of, maybe it's a slight sort of cliche in term, a digital asset treasury as opposed to a Bitcoin treasury, but it does come up quite a bit.
Yeah.
Okay, I must have lived in a bubble because I hadn't heard it before, and the third time I heard it, I had like, what is a DAT?
Yeah.
Sorry.
Little did you know you were running a DAT.
Yeah. Shitcoin I hear often, but that's more in the Bitcoin community. But when we have spoken to the institutions here, I think lots of the discussions is around like, okay, it's new DATs launching all the time, and we get access to go into at 1 MNAV and probably sell at 1.5. And the counter argument for me is like, okay, I have 1,000 Bitcoin. If you give me another 1,000 Bitcoin, I'm very close to 1 MNAV when we close the deal.
Yeah.
And then like the brain shifts a little bit, okay, because it's all about like, how do you create the right capital architecture to ensure that you catch up with that premium. Time to cover is the phrase we use in our industry. But MNAV is very often used in institutional meetings. Time to cover is not yet there. And we have spent a lot of time trying to figure out what they're actually looking for. Is this like a long-term Bitcoin exposure? Then you can design products that, for example, are dependent on the Bitcoin price to convert. Like, for example, we are exploring with a Bitcoin-denominated convertible bond where the price is determined by the Bitcoin price as well. So if our stock can't outperform the Bitcoin price, we can't convert them. That's interesting for some investors. And someone else asked us, but could you just hold my Bitcoin and I get an equity kicker and I get a penalty if I draw them back? Maybe that's interesting. I haven't looked too much into it yet. And the third one is all about the fiat money that wants to come in to get Bitcoin exposure in a structured way. So I think that's what have been quite fascinating over the last couple of now soon weeks here in the US, is that as long as you can take down the discussion into the single point of like, how do you want exposure to this asset class? Because if you don't want exposure, I can just walk out of the room, because that's the only thing I promise that will do my best for my shareholder, is to increase Bitcoin per share. So that's really opened up my mind that it's so many ways people want exposure to Bitcoin. If it's Bitcoin denominated exposure, or if it's fiat denominated, or if it's like income generating, like an fixed income product. All these products has opened up my mind to think, okay, this is going to be how Bitcoin treasury companies are generating the alpha compared to the underlying commodity of Bitcoin that we all believe will go up over time. But if you basically like a passive ETF, it might be fair that you trade at MNAV 1 or actually below MNAV 1. But that's also fine for the industry, because it's plenty of people, plenty of companies with a premium that will be more than happy to absorb your Bitcoin and, sorry to say, fire the management.
I'm looking forward to the future in terms of what we all do together in terms of trying to increase the use of the evolving industry metrics. Because I think you're right with things like MNAV. You can if you understand the market, it's very easy to compare what seems to be like a cheap or an expensive Bitcoin Treasury company, and our focus is on Bitcoin yield. As you've done, we've both achieved exceptional yield quarter to date. In all honesty, for both of us, slightly helped by the fact that we're at that particular stage in the life cycle. Like when you're at 500, 1,000, 2,000, 3,000 Bitcoin, it's easier to deliver that without significant amounts of capital. Not to say that we haven't achieved a good thing, of course. We have achieved a good thing. To be fair, it's the best in the world, the two of us, I think. But it is important to take it in that context. Whereas then you've got some companies that perhaps aren't delivering that yield, and maybe they're getting valued as if they are. So as we get better as an industry with the stats, I think that will be interesting. But we've done so the vast majority of our treasury is from equity, pure equity. Over £200 million raised in 5 months.
Through ATMs?
Well, actually, probably 75% of it comes from placements and subscriptions, and 25% of it comes from the ATM. Interestingly, the ATM staff facility, off the top of my head, has only been in place for, let's say, 8 weeks, which, if you think about what's happened to, the global industry, and the last 6 or so weeks haven't been very kind. It's quite incredible, actually, that we've raised approximately 25% of our capital through that particular facility. But we've also done a Bitcoin denominated bond, a small one, because what we thought was right for us is to have equity, which includes the ATM, as the primary capital raising tool at the moment. And then alongside that, have a small amount of the Bitcoin denominated bond. And it's a very similar structure to what you're talking about. But we've tried to do it so that it benefits the investor. So they get the equity upside, but they also get the performance of Bitcoin, if it doesn't convert. But then it works very well for the company because it was effectively a better share price in terms of a higher share price, i.e. the conversion price, than we would have got if we did a direct placing at that point in time. So I think that's quite interesting. I think we always need to be careful about, well, in our opinion, getting them to, share at an appropriate level the performance of Bitcoin, because in theory, over the longer term, a Bitcoin Treasury company that's properly run should outperform Bitcoin. So maybe a bias towards that product going into the equity side of things, unless maybe it's just a fixed income thing, because then you're giving them, a guaranteed coupon, dividend, whatever, depends how you structure it. But then the company's keeping all the upside in the Bitcoin. So it's like everything else in life. You just need to make it fair to the investor, fair to the company, to share that, that future value.
Completely agree. For me, I think like equity is a wonderful instrument for some investors, but for others, like a skeptical Bitcoiner, like how do you design a product that, for example, general thought, like a Bitcoin denominated convertible is fantastic for the company, it doesn't put any credit risk. But in a scenario where Bitcoin goes bananas and your own stock lags, you can actually deliver back. It's a wonderful fiat return. So if you measure things in fiat, it's a wonderful product. If you measure things in Bitcoin, you have the potential that your stock is actually underperforming the commodity we all believe in. Short term, long term, medium term, we don't know. So what we have discussed with Bitcoiners is like, okay, what if we do that convert mechanism depending on the Bitcoin price? So if the company, the leveraged Bitcoin play, can't over deliver in terms of Bitcoin return back, we won't convert you. Like fiat investor doesn't give a shit about that. So you have like all these opportunities now to design these instruments that works for you, and it's worked wonderful for you. And so maybe over to like a question to you, Andrew, like why are you so successful? Like what did you do right?
Well, I think we just did what we said we'd do, which is, we've got a strategy. It's quite simple. And we've done our best to implement the strategy. So, when we started, when the advisors and things were getting used to the sort of the world that we thought we were entering into, they were quite surprised about the speed of capital raises. But we just sort of kept our foot on the gas, and sort of executed the strategy. I think the thing that you have to do, is you have to start at the right level. I don't know off the top of my head, but I imagine that we did our first raise within a week or so of being listed, and I think in the first 16, 17 weeks, we almost did a raise every single week.
Mm-hmm.
So if you want to get the flywheel turning, I think you need to do that. The thing that we're very fortunate to have is, a lot of support from people, and that transposes, into liquidity, which means that, the ATM style facility can help. So building out those capital tools, we, I believe we're the first people, maybe even the only people at the moment, to do like the Bitcoin denominated bond in the UK.
Mm-hmm.
That was heavily inspired, albeit a different structure of an instrument, by Alex from Capital B. So we did that. And I think that's what you've got to do. You've got to, get the capital strategy and actually implement it. And then alongside that, treat people with respect and communicate and just do what you said you would do. I think one thing that perhaps we don't get enough credit for is, my approach to discounts on capital raises. I've often said to people over my dead body,
yeah.
give a discount.
I know. I've been on the other side of that trade.
Yeah.
X didn't like it.
But that's, that comes back to the fact that we've all got similar beliefs and we execute things sometimes the same, sometimes differently, because maybe the markets we're into are different, or maybe the opportunities that we've got at times are different. And that's not to say that will always be the case. Like it may be in a year, 2 years time that it's appropriate to do that for a particular reason. I hope not. But that's worked from a shareholder value point of view. That's worked very, very well. But, I think in some ways the market's almost pricing in that, whereas I've always been very clear that that's not happening.
So do you raise all the capital yourself?
Yeah, we use a mixture of things. So right at the outset, we involved retail investors from the start. In the UK, it's a hang up from when we were in the EU that you can only raise 7 million euros. I think it's 7 anyway, before you have to do a supplementary prospectus. So we couldn't raise money from retail investors once that was maxed out, and it got maxed out very, very quickly.
Yeah.
And then in terms of the capital away from the ATM style facility, that's come from a mix, so that's people from my network, and then it's also people from the brokers. Probably if you look at every single raise, there's a mixture of the two, different amounts at different times. The beauty of when we raise money ourselves is the commission is either zero, or sometimes we pay like a settlement charge to the broker for settling that stock. It depends where it comes from, basically. Whatever's best, because there's certain rules that you have to comply with, in terms of AML, know your client and things. But yeah, we've raised we've raised quite a lot of it ourselves, and moving into the future, where the sums of capital need to be larger. that's why we put so much effort into the institutional side of things, and that's a global thing, not just a UK thing. And some of those institutions will do, tens of millions. Some of them might do 5 million, so they're different as well. Like the shareholders often talk about the institutions, but, an institution can be, a pretty wide range of sizes, you know? And that's something that perhaps not everyone sees all the time.
Yeah, I just want to say, like, I want actually to thank you about the how direct you was on the discount. I think that's your Smarter Web community was quite vocal about it, and it's actually changed our mind a lot. And I'm coming a little bit from the other side. I'm used to selling investments to investors, and it's normally where you do the deals. Like, you have to have something to sweeten the pie. But in this case, that made me come to the conclusion that we are doing things in a different order in this industry. We are involving retail from day one, and I changed my mind completely about the discounts because of that. Because I tell the investors now, I can give you a discount, but that will result in a poor share price tomorrow. And I think like that you was so clear about that is a great thing in Europe, because the investor now understand, okay, if I fuck with the retail, that will punish even if I get the discount of 10% today, that might be in red numbers tomorrow, because the retail punish you 15% for doing a discount of 10. So yeah, I thought it was worth mentioning.
If you think about it though, with the business model of a company pursuing a Bitcoin Treasury strategy, if you offer a discount, you weaken the incentive for the regular shareholder to hold that stock. So you encourage them to try and second guess when you're going to do a raise. And in a lot of cases, those raises are fairly frequent. So you actually hurt everyone by doing that, because if certain shareholders think, I'm going to sell, which would weaken the price, because I'll then, try and offer the company some money, which will come at a discount. It just doesn't work if you do it that way, in my opinion. So, that's pretty cool to hear. My wife, right at the start, when we listed the business, I was speaking to her about the first raise. And I said, well, like everyone's telling me that, there has to be some sort of a discount. And she said, no, just stick to your guns and tell them no. And then within like 2 or 3 raises, they didn't even bother asking me anymore. And so then what we started doing is we started to explain to, the institutional investors that, no, you're not getting a discount, but you do get a discount on the MNAV once your money arrives, which is exactly the point that you made before. So yeah, you do get a discount, but it's a discount on the MNAV after your capital joins in with everyone else's capital.
Yeah, that's actually one of my selling points these days. Like, if you want 1 M now, I can give you 1 M now. Just give me enough money. It cost you like 180 million. Then you have probably a good deal for everyone.
It's really good. It has been interesting how some of these pipe deals have shown, they've been structured around you give a discount and that's how you attract more capital and get a bigger number. But it also creates this, we're seeing now, this sort of structural headwind of a lot of those investors don't believe in the model. They just want to collect that 10, 20%, and that means that they're hedging out their exposure some other way, shorting the stock while they're doing the deal. And then they're getting out and they collect their 10%, job's done, off to the next one. And that screws up a Bitcoin Treasury company's flywheel. I think it creates a headwind on day one if you go by that model, or it can, or at least we're seeing a lot of that. And so it's interesting. It's poetic how doing right by retail and making sure that it's fair for everyone is actually in the best interest of all investors, because you're not creating any headwinds that hinder the progress of the collective mission of the company to grow Bitcoin per share.
And I think that's what's changing now with public companies, that you go so early. Like, public companies isn't exit liquidity anymore. It's actually where you create value, and that that's actually, you changed the model completely.
This episode is brought to you by Arch Lending, the premier provider of crypto-backed loans designed for both individual and institutional investors. At Arch, your digital assets work for you without selling them. Arch offers flexible loan options tailored to your needs. Backed by industry leaders like Morgan Creek Digital, Castle Island Ventures, and Galaxy Ventures, Arch Lending is setting a new standard in crypto-backed lending. Are you ready to unlock the potential of your crypto assets? Visit archlending.com to learn more and configure your loan today. Are you looking for comprehensive analytics on corporate Bitcoin adoption? Strategy Tracker delivers real-time insights into how companies are executing their Bitcoin strategies completely free. Monitor NAV premiums, cost basis performance, and track how corporate Bitcoin Treasuries perform against the market. Upgrade to premium for just $3.99 a month and unlock exclusive benefits like detailed market rankings, real-time trading volume analysis, and advanced performance metrics for corporations embracing Bitcoin. Apply code KOTZ at checkout for 100% off your first month of premium. Strategy Tracker is your essential tool for measuring the effectiveness of corporate Bitcoin strategies. Visit strategytracker.com and gain the analytical edge in understanding the Bitcoin Treasury phenomenon.
Really like to ask you both, like, what has been like the hardest thing on the journey? Like, well,
Do you mean professionally or personally?
I think body and mind is very well connected, and if you don't like have a good feeling about yourself in general, I think that will eventually affect business. I think personal and business is more of the same.
Well, I think the hardest thing for me then, taking everything into account is, the fact that, on one hand, I absolutely love what I do and I feel that I'm, one of the luckiest people alive. But then, I've got a family and, they don't see me that much. And that's okay. They love seeing me happy. And so they like that. But, I think they miss me a little bit. I think that's probably the hardest thing. What about you?
Yeah, I'm in a little bit the same situation. I got my daughter 6 months ago.
Wow.
And it's been quite a rough ride, and I had never had so much fun in my life. I love what I do, as you do, and I love traveling as well. From a professional swimmer, I've always like jumped town to town. It's in my personality, but like seeing, like when you leave your daughter for 2 weeks, it's actually like at the 6 months old stage, things are different when you come home.
Right.
And yeah. I have another son at 3-year-old, which I can speak to on FaceTime and stuff, but it's basically like figuring out how to combine the professional life with the family life you have at home. When you have two things you love higher than everything. So you have to like balance it in the right way. I'm nothing to complain about, but that is like also something I think a lot about how to do it in the future. Because in the Bitcoin Treasury space, 1 week is a month or 6 months in TradFi. I can't take the week off. I canceled my summer vacation this summer because I had to work.
Yeah.
What about you, Jesse?
In a similar place, toddler and one on the way, and it's hard to away from the family right now, and it's tough to find that balance. I also find it's interesting how it's hard to find the time to create all the content or analysis that I want to do. Sort of the classic challenge of like high urgency, low importance things, dominate when you kind of know there's other things that are higher importance but lower urgency that you'd like to get done for the business, for spotlighting the value that we believe exists in our company. So it's the classic challenges of finding the right balance of how you're allocating your time personally and professionally too.
Yeah.
And before this, you sort of alluded to the classic entrepreneurship phrase of like, I think it's like a Peter Thiel quote of chewing glass and staring into the abyss is entrepreneurship.
Yeah.
And it's funny how these are public companies. It's totally the classic entrepreneur experience.
How do you tackle the highs and lows?
Well, so I've been an entrepreneur, small business owner, whatever you want to call it, for 15 years. And I think one of the things that you get as a small business, so this is pre being a public business, is you get resilience, and, you just keep going, and, occasionally, by the end of the day, you're a bit tired, maybe a little bit.
But have you felt this
tired.
like volatility before? Like you're a rock star one day and...
I know that what we're doing within the company is getting better and better, every day, every week. And that's my focus, because that's the thing that I can control. I don't like seeing the share price, but I get very, very few comments online of people, being horrible, and I'm obviously grateful for that. So I think so far, it's sort of not too bad on that front, but all I can do is do my job and do the strategy that we've been very, very clear about. Personally, in terms of the volatility, it doesn't really bother me, from my own side of things, because I love Bitcoin and I love Bitcoin Treasury companies, and I know that over the long term, in my opinion, they'll outperform everything else. So it's obviously much less enjoyable when you're going through a period and the share price is coming off. Like I find the MNAV coming down more frustrating than the share price, which is obviously linked, but a slightly different thing. But you just get up and you go again, and it's what you've got to do. Like,
I think it helps to feel. I guess my feeling is that more of annoyance or frustration at the gap between the market's pricing and the value creation that we have a track record of delivering, right? And so it to me is like, well, this is, I guess, an opportunity more than anything, and it's ridiculous that this is happening, but knowing that the numbers are there and having conviction in the model has made it. I used to run a crypto hedge fund when I first got into this space, and in 2017, and we were down a lot in 2018, and that was harder because there was less conviction and less clarity about the value of what the fund owned then, and now it's easier on that front, but the market is going to do what the market's going to do, and we just have to keep doing what we're going to do. How do you find the last 8 weeks have been tough, and how do you find it?
For me, it's all about focus. I basically track my productivity quite closely, and the more I open the stock app, the less productive I am. I think going back to having clear objectives on what to do and why you're doing it, and trying to tell it to yourself and tell it to everyone else in the organization, because at the end of the day, we can't affect the stock price. It doesn't help if I do an insider buying or whatever the investor asks me to do. It's not how the market works. But it takes some time to unlearn that, because it's quite exciting as well. When it goes up, it's exciting. When it goes down, but it's not so pleasant. But at the end of the day, it's all about the focus. But more importantly I think as an entrepreneur, it might be easier, but you have employees that haven't experienced anything like that. They might coming from high paying jobs. They have a lot of things they have done, and they've been very successful, but they haven't gone through this volatility that you might be quite resilient as an entrepreneur.
I thought that was almost going to be a question for you, Andrew. Do the employees ask or wonder or have anxiety? Does it come up with the volatility, or?
Yeah, so, we do talk about the share price a bit internally. I like to think that everyone knows, how hard I work, in terms of, not just the effort that I put in, but the hours that I put in as well. And so I think they all understand the strategy. They understand where it's going. I think in a way, they're like the external shareholders where, they love seeing it when it's going up and not so much when it's going down. But I think it's easier for the employees, and it's easier certainly for me, because, I've got zero doubt in what we're doing. And obviously with, some of the employees, the ones that are on the permanent insider list, you can have open and honest conversations. They know what meeting I'm going to. They know what we're talking about. They know literally everything about what we're doing. So, sometimes I think, what would that feel like if I was just an investor and I didn't have all that inside information? And, being honest with you, I think I would potentially find that harder, because ultimately what you're asking people to do is you're asking people to trust you that you can actually implement a strategy that they understand properly. But I think if you look at our track record, it's been pretty good, and we believe that we're on the right path for the next 3, 6, 9, 12 months and beyond. So yeah, it's just it probably is easier when you're within the company than when you're outside of the company.
Yeah, ultimately we're sort of asking investors to trust the model and trust leadership to execute on the model. And the experience for investors is tough because, I mean, our 60-day vol annualized is 200%. The 200 vol asset is wild. Bitcoin's a 40 vol asset. And that vol feels great on the way up. And it's very testing when you're in a 2-month bear market. And that's a big ask for investors. And I think it speaks to, if an investor is willing to hold an asset through that, it means that they have conviction in their own research and in the model. And that's a testament to the retail investors that are, make up the majority of our investor bases, is that they're smart and they've done their homework and they understand Bitcoin and Bitcoin vol, and they want more of it because Bitcoin's vol is good vol. And Bitcoin Treasury companies amplify that and square it for you. And it's painful, but it's also great in the long run. And hopefully we see more of that in the next 12 months.
So we'll obviously tag everyone on social media, but can we just go around and just let everyone know kind of where they can find you, the firm, the ticker, whatever you want to cover, just real quick in case someone's maybe listening on audio?
Yeah, for me, it's on X is Sandra Andersen, and H100 is the ticker.
And for us, it's ASJ Webley, or Smarter Web UK, personal and company profile. And the ticker in the UK is SWC. The ticker in the US is TSWCF. And in Frankfurt, I believe it's 3M8.
Yep. Yeah, that's right. And I'm on Twitter on my old pen name of Croesus_BTC.
Awesome. Sandra Andersen, Andrew Webley, Jesse Myers. Thank you guys for being in the studio. This has been really fun.
Thank you, Tim.
You.
Thank you.